Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you on a Monday night to chat markets, of course. Before we do that, we need to discuss the disclaimer, which says that everything we're going to talk about is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Of course, trading and investing is risky. At some stage, you're going to lose money. That's inevitable. Get used to it, unfortunately. But I think we're pretty good at that by now and understanding what our role is in this process. You're responsible for everything you do, not I. The agenda for tonight, yes, that is new as of the week before last, public service announcement. If you didn't get last week's session, and that was the 17th of November, it's because there wasn't a recording of one. I had a power outage over here in Caranup, and whilst we did start the presentation, my laptop inevitably ran out of battery and we weren't able to continue it, nor was I able to salvage the recording, so that's why you didn't get it. But I can assure you the power is running now. So your job is to give me your setups for this evening to discuss. I'd like to know the ticker and the market it's in. Preferably you can say all Aussie stocks or all US stocks, all caps, so I know that I's aren't I's and not L's. What type of setup? Is it a continuation, a turnaround, an aggressive, or it could be a combination? Maybe it's a turnaround, continuation turnaround setup, for example. Are we adding R? Are we maintaining R? Are we minus R? What key levels are you watching, please? Let us head over to the Amy Broker screen while those requests are coming in and talk about the portfolio management model, which on Friday, woke up, saw that big black candle. It stands out like you know what. I don't think we've seen a candle that big for a long time. And I know in percentage terms, it might not be as substantial as some of the other big black candles at lower prices. But I'm just curious, when was the last time we had such an obvious showing of supply side control? I feel maybe that one, engulfing the candle before it. And look at what happened to price after that. You've got a couple here. You could easily blend together to get to one that is that bad. Certainly we could blend those two together. Do we get the picture here? Maybe that one. And this is odd. I haven't done this. Oh, we've got some stuff here. Don't need those anymore. I'm going to get rid of those. I should do this later. This is me being absolutely pedantic. There's other words for it. There you go. That's obviously 2020. So before I did the last reinstall of Amy Broker, I guess, because my lines aren't there. That one there. That one there. Can we call it that one there? I'm talking from the top. I'm talking from a short-term uptrend. And you should do this. You should do this sort of research, let's call it, backtesting, to go and confirm for yourself that if only the stuff you know is true. That one there. Maybe those two blended together. Maybe they're not big enough. And it's good to see maybe some false signals as well. I mean, these are probably, I don't know, could you call that a false signal? It did go down a little bit afterwards. Let's call these two false signals. It was pretty close to the low by the time they occurred. But I think they're the only two. I'm trying to keep an open mind here. Maybe that one there. I'm trying not to just see what I want to see. And maybe my brain is wanting to see is where you see the big black candle, the price goes down. So I'm deliberately trying not to do that. But what did you see? Did you see that when we get these big black candles, and maybe that's a false signal too. There was a substantial period of consolidation after it though. Is it fair to say that when we see big black candles of that magnitude, more often than not, the price tends to keep going down? For that reason, I pulled me back to a 1/3 risk position on the Nasdaq. We were 1/2 before that, and I can't remember when we went to a third. I don't know. Maybe there. I don't know. Maybe it was before that. I can't remember. It's irrelevant. Does it really matter? When I went to a third off, we're at 1/3 risk position now, and this is the worst place to be. I feel for a trend follower. I always feel a bit nervous at 1/3 risk position because the generally bull markets go up, right? And I'm always reminded of this little anecdote, and I do want to tell it to you because I want this line that's at the end of the anecdote to be stuck in your head, because it's certainly stuck in mine as a trader. But Rick Stein, the TV chef, I love watching his show, and he's such an affable guy, isn't he? But anyway, he was walking along the beach one time talking, maybe he was in Greece, I don't know, I think he was in Greece, talking about olives, and he said that he was sued by a patron at his restaurant because I think they chipped a tooth or cracked a tooth on an olive pit. And the judge eventually threw that case out of court, saying, quote unquote, it is in the nature of olives to have pits. I thought, well, that just sums up stock markets so beautifully. It is in the nature, ladies and gentlemen, for stock markets to go up. It is just in the nature, it's inherent. We should not be surprised that you bite into an olive, and even though you thought it was pitted, there was a pit in there, because it's in the nature of olives to have pits. We shouldn't be surprised that markets keep going up. It is in their nature to go up. So this explains why when I'm at 1/3 RP, I'm always a little bit nervous, because it is in the nature of markets to go up. And that's why I'm nervous. But we have to be there, because it's sometimes also in the nature for markets to bloody well go down too, isn't it? So, and we saw the big black candles. I won't labour this point, but we know that when we do have these transitions, because I'm not pitching this to the fresh-faced, bushy-tailed, wide-eyed, rose-coloured glasses. You traders in the market NY, you're all stalwarts, you're all veterans, you've all been hanging out with me long enough to know. I don't have to convince you of the fact that when we see these rotations, we know what can happen. These rotations are not guaranteed to happen, but they all started the same way, and therefore we take these precautions. Let us head over to the ASIC total, where we were already at 1/3. I'm pretty sure on that day we reached there, and we were heading there before that. And today, a very strong day, make no mistake. Good market breadth. I'm going to say participation could have been better in some of the sectors that we rely on to really get us going, like financials and resources. But opened at the low and closed at the high, with 247 rises to, I think it was 30 in the ASX 300. Zebra pattern. What's a zebra? We've got, well, you could almost really count that. You really can count that. Take out that candle, which was a nothing day. Well, we have really gone big black, and these are 100-point days, 100-point plus days, 100 points down, 100 points up, 100 points down, 100 points up. And this is also something that makes me nervous, because my trading system, it can't do well when markets are chopping around like that, because it's a trend following system, and when markets are doing that, it's the definition of a not trend. But that's why we're at 1/3. That's exactly why my model takes me to 1/3 risk position, because it knows some crazy stuff can happen here, and you're just better off being in cash and just letting it settle down and waiting for that next strong trend, whether it be up or down. And right now we could go either way. So that is the summary of where my head's at in terms of what the market's doing. Is it possible that today's stabs out the low and we go back up and make a new high over the period of the next few weeks? Absolutely. We're coming into a seasonally very, very strong time of the year. I mean, November is supposed to be part of that as well. But make no mistake, December, January, it is in the nature of markets to rally at those times of the year, and really all the way into February in many years. So nothing would surprise me at this point in time. And we'll let the market guide us. That's all we can do. Let's have a quick whip around the grounds to see if there's any red flags. And in this case, red flags are bullish flags to tell us that maybe we need to have more risk on than we actually do at this point in time. Heading over to the Russell, and that's a strong candle out of the long-term trend ribbon there. Hey, we would almost expect that to happen right now. I know we don't expect things because we trend followers, not prognosticators, but on that day there, let's look at cactus, and then bang, big white candle out of the long-term uptrend ribbon. That's not a surprise for us. So look, holding there, it's still low peaks, low troughs, predominance of supply side candles. It's not going to push us off this 1/3 risk level that we're at. Let's head to Europe, and these were going gangbusters. We like to see that coordinated international growth, and we're not seeing it. But it's also not a train wreck. And I think that's the underlying message here. However, that DAX is starting to look a bit sketchy, is it not? Not great, but not a total train wreck. And FTSE's still very, very strong, and Spain still very strong. But they are starting to rotate on their short-term uptrends. The Hang Seng is largely neutralised now, as is the Nikkei, to be fair, in the short-term trends. The Nifty 50 still looks very strong. And we've got some issues now on the Shanghai Composite. That is a short and sharp decline below the trend ribbons there. So certainly nothing that we're seeing that would push us off this thesis of maximum risk aversion at this point in time. Heading over to the base metals, and I suspect they are going to resemble some of the equity markets because they're all risk-on assets at the end of the day, aren't they? And we are seeing some resemblance there in aluminium. Copper still strong, but just coming off the boil a little. Iron ore flat. Nickel, and maybe the canary in the mine shaft was nickel, led to turning back down again after looking promising. Tin is still quite solid, and zinc also starting to neutralise as well. Had an interesting day on lithium carbonate on Friday. I was at the cricket watching 19 wickets fall. Amazing day. And it wasn't the only thing that fell quickly, and that was the lithium carbonate price. And I didn't check what the news was, nor did I really care, honestly. But that was an interesting move, and I would say a substantial supply side event that neutralises, I think, this short-term trend for a period of time. And I guess it occurred in an area that we would associate with excess supply, and I haven't killed those two lines, which I'll do that afterwards. I think that's it. We're done here. Let's head over to the TradingView screen, and we'll kick off with gold, which I did an update today in ChartWatch Markets. You can read my views on that one. Long story short is it's looking a little bit neutral in the short term, as is silver, and it just goes to show those points of supply 15.77 and 43.98 are actually pretty decent, I think, and will take a little bit of cracking. But the short-term trends are still intact. Silver definitely looks better than gold, look, I mean, they're under some pressure though. Let's say that. Moving up the list, looking at copper, so it's flat. There's nothing interesting going on there. Iron looks half interesting, maybe heading back up, but still very much range bound. Uranium looks under significant pressure, and we're seeing local uranium stocks starting to really rotate over again, and they are the worst stocks on the entire market to trade. Are they not? Uranium stocks, they are just bloody awful. They just start to look good, and the uranium price starts to, you're guaranteed it'll go straight down after that, and then they're just bloody awful. So what's the point, I ask you? And nothing going on any of these commodities here as well. Thoroughly uninteresting. Something that I said to you several weeks ago was thoroughly uninteresting, I want to say, around here. And then I ran it in ChartWatch Markets about this day here, and said to you there that look, this is the first. That's the first candle I've actually found interesting for a very long time, and called it a minus R on that day, and then a minus R, I'm pretty sure, on that day, and then a minus R, I want to say, on that day or that day there. I can't remember which one. And it turns out it has been a textbook. It's just a textbook turnaround setup, and I really should charge a lot of money for teaching people that setup alone isn't. I should actually just shut up shop, put that setup behind a paywall, and teach nothing else. And I put to you that the turnaround setup, both long and short, would be worth any dollar you ever paid for it. That's just my view. And there you go. Let's go to, where should we go now? Let's go to the bonds and see if there's anything that's worrying me there in the bond market. Starting with Aussie 2s, and coming off a little, and that might help the equity market rally, because we've talked about this, how this was probably the elephant in the room, wasn't it, in terms of this recent pullback. So if that starts to pull back, if these yields start to pull back, it will probably assist stocks. Nothing doing there, and this is what we want. We want to see nothing doing at all. That's helpful I think, as well for US equities, but we don't want to see precipitous fall. But just ebbing along the bottom here, even with a gradual decline. 2 decent black candles there, maybe a little bit concerning. We don't want to see precipitous fall, but coming down a little is fine, just a little. And the 10s don't look as bad, so that's maybe... if the 10s are stable and the 2s are looking worse, possibly more to do with Fed easing cycle rather than the end of the world. If the 10s start coming off, then we're in the end of the world, end of days. Let's go to your offline requests, and I've only got one today, and it's Mick with Core Lithium. Let's have a look at that one. And look, lithium was going gangbusters, and this is just the nature of this bloody market at the moment. And we had it with all those rare earths and critical mineral stocks. They go beautiful, 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 add risk, add risk, add risk, and then the turnaround was just instantaneous. Nothing seems to have a consolidation and then another go. It's just all or nothing. And yeah, look, I'm with you, Mick. Mick's questioning minus a third, and I think that's the right precautionary measure here. To the letter of the law, it really does look like just a third. If you were to go maybe a little bit more, a half, I also wouldn't mind, just on the basis that, keeping powder dry is not a terrible thing right now. A few people are doing thumbs downs because I haven't changed screens. Thank you. That's called Lithium there. You didn't miss much. These 2 candles are what I'm worried about, and it's not just these 2 candles. It's also, this is where it closed, and that's kind of where everybody decided on that day that that's what Core Lithium was worth. Solid day, and we opened here. So we closed here, and then we opened all the way down here. So really, for me, this black candle kind of extends a little bit more. I mean, the shadow told you the story anyway, because it opened here and then tried to rally, and then got beaten down. Little rally at the end, not much. But that gap from open, I don't know if that's the right word, because it's not a gap in the price, but a dip from open, whatever you want to call it. And blend these 2 candles together with that extra bit. That's substantial supply coming in and hitting a demand side that just could not be stuffed anymore. Like they've had enough. They're taking their profits on this properly to pay for losses elsewhere, and they're just happy to be out for this point in time. So that sort of a move, I think, neutralises the trend. Not necessarily stopping the trend, but there's enough there to not be full risk position. Let's not labour the point. Let's just go not FRP, exclamation mark after that. In brackets, minus R, because that's our new system, isn't it? We just go minus R plus R equals R, and you figure out what you need to do. I'm confident you can do it. SKS, okay. I did put this in. Did I put this in tonight? I don't think I did, or did I? I can't remember. I didn't. It wasn't feature. I can see it wasn't feature. But I might have put it in the broader list or I might have left it out. I'm not going to tell you why either way. I might have put it in because I actually like this as a turnaround continuation, right? Continuation, turnaround, doesn't matter which order you put those in. That's your continuation, and that's your turnaround, obviously. That, I think, kept it out. And look, we can just go back here. I'm curious now. I need to answer this question for myself. I don't think I put it in. And you can see I didn't. That's the list for tomorrow that you have access to. If you don't know how to access that list, somebody did email me a few weeks ago. I'm sorry, I didn't respond. But I do put the instructions or a link to a video with the instructions in the email I send you every week with the recording. Okay, so I think you can figure that stuff out. Now, that little shadow, nice candle day, don't get me wrong. Solid candle above the short-term trend ribbon. But I'm not convinced yet. There's a bit of supply. There was a bit of supply. Supply was a little bit more organised than I would like. But we're on the right track. So that's why I didn't put it in. It's also why I could have put it in. Now, when will I put it in? Sorry. Arrows pointing to supply. Arrows pointing to supply. I can't blame the power this week. Arrows pointing to supply. Too much supply. More supply than I'd like. But strong candle. Decent candle. That's why I put it in. It's also why I didn't put it in. And what am I waiting for? no surprise here. Look, just give me any supply side showing, even if it's just a little bit of an intraday dig. Even if it's just intraday. But hey, if it goes up a little bit and then just has a little pullback, it's just a dig. That's all I'm waiting for. And then I'll be far more comfortable with adding risk to this one. Hopefully it happens without the price going up too much, so I'm not giving away too much reward to risk into this major point of supply. And we all know that it's a major point of supply. It's going to take some getting through. There's got to be plenty of latent supply lurking up here. So what can I do with it? What's my final observation this time? Equals R, I think, goes without saying, because I nearly put it in the list. Could I add R? Yes, I could. Plus R. I could even go next demand side candle, or can I offer maybe the next dink? Yeah, but it's not minus R, is it? Okay, let's go to next one, which is AZJ, which I don't know if you saw when we looked at the list for this evening, is in the list. We can stay zoomed in there just for a second because that just makes it so bloody obvious. But when we zoom normal, which is where we really should be looking at everything, we can see it's more of a turnaround setup. In fact, it is a turnaround setup. And we are going to have, therefore, potential points of supply all the way up that will likely come into contention. This is, I think, is a level that needs to be looked at, and then I think up there, and look, probably there as well. But the further back you go, the less relevant I think they'll be. And I'm not saying this is a reason why you wouldn't do Aurizon, but just going into it eyes wide open. And I always feel that if you could make one-to-one, and let's say the arrow from here to here is your potential reward, we would preferably like to see that your risk is about that. And we can see that if we are, there would be no way, there's absolutely no way that we could still be FRP beneath here. So close below is not FRP. That's where we know there'll be risk off the table there. You can see I've just copied and pasted the arrow, so we know that this distance is lesser than this distance. So we've got at least one-to-one reward to risk. So that is a way, I guess, to look at the setup and then look at the reward to risk on top of that. Yes, for me, on AZJ, so plus R, don't need to wait for any demand side candle because you can see it's got an amazing demand side candle there, and above average volume as well, and equals R if you haven't, you didn't want to add any risk on it. Is there a level here? Yeah, there's a bit of a level there that I probably could draw in, but when we zoomed out, we saw that it didn't look as significant as some of the other ones. And even then, I would argue that level is as good as consumed. You know, we've got to close in very close proximity, so I don't think it's a major issue anymore. That's consistent with the stuff I teach you. So happy with that one. I want to say that it first featured as a turnaround setup on this day, and also on this day, and probably on that day is there. So it's been in a few times. Okay, let's go to your online requests now, and we're going to kick off with Adonis, who I'm guessing has got US stocks, so we'll save those for later. Adonis, but hello, I'm well, thanks. DMP for a turnaround from Michael. Yes, it has been a turnaround setup, or a bit of an aggressive one, because we haven't had the requisite trough, the dink in that long-term uptrend ribbon, preferably in the top half of it, even more preferably above it, I should say. So that made it a little bit more aggressive, but on this day here was my setup. Okay, that's the day there, because that's the day that we move over that halfway point. This is the day here, and you don't have to be too fancy about it, but if you think roughly that's the halfway point of the long-term trend ribbon, then beneath it, technically, we haven't got more than half of it. We don't have a consensus yet, if you like. We haven't got past the demand-supply balance point of that long-term trend ribbon. So we still feel that it could deliver us that dynamic supply. In fact, you know, it looked like it was going to do it right there. It looked like it was perfectly going to do its job. So the entry for Domino's was earlier Look, I'm trying to find a candle here, and I can't see a decisive candle here that would have made it aggressive. That's the closest thing there, but there we just don't have the reward to risk into our trend ribbon because we're fearing this. So I personally, I couldn't have taken the trade there. That would be the earliest you would do it if you didn't care about the trend ribbon. There also. Here, this is the dink. This is the dink I was looking for, and this is the convincing candle. It even gaps on that day. It looks like small gap, strong close. So long story short, I know there's lots of stuff on the screen. Let me get rid of that stuff, because we've obviously done work on this, pardon me, in the past. That's my first plus R. And there's no guarantees with anything you do. Plus R equals R minus R. And it doesn't look like it's going perfectly in line with what we would like, and that's going to happen from time to time. But you know, the market has been a bit rubbish at the same time. It looks like the short-term trend ribbon is beginning to do its job and act as a zone of dynamic demand. Those lower shadows are telling me that. And whilst that holds, I think we're okay. Certainly for me, beneath the short-term trend ribbon, I have to concede defeat and say, didn't work out. Turnaround setups don't always work out. In fact, this was an aggressive one. And therefore, say la vie, didn't work out. So I think I'm still equals R right now. I don't think there's a lot we could have done before that. You could argue that that black candle is the minus R. I don't think so. I think that's being a bit pedantic because everything before that was very, very strong. That's nothing. That's got a downward shadow, and that's got a downward shadow. So I think we're just here. We are where we are. If you're wondering why potentially that is still an aggressive setup at that point in time, to the letter of the law, we don't have the dink, as I said, preferably in the top half, preferably above the long-term trend ribbon. So it's still classifying as an aggressive setup. And the trick is closing above the midpoint, and then I'm able to have a go. Now, the reason for that is beneath the midpoint, this is still potential latent supply, okay? Once we're above that balance point, and this is just psychological, I swear to you, this is just me making this stuff up, but making it up on the basis that I've seen that the long-term trend ribbon kills so many trends, I need to have some rules. This is all this is about. This is just about having some rules to hold myself to account. So I'm not just taking stuff willy-nilly going, oh, that was aggressive, it didn't work out, that's okay. No. I've got an absolute clear-cut, definitive set of rules. And beneath the halfway point, for me, psychologically, the long-term trend ribbon is still where I need to work out my reward to risk to. And if I can't make my reward to risk into that, I can't. Once I get above the balance point of that, you have to, is it fair to say that the ribbon is less important now? On that candle, why would we think the ribbon is still an issue after everything we've seen? So we look through the ribbon. And now, so this is not about the setup, because the setup is clear. This is about our reward to risk. Okay, this is what makes this still an aggressive setup, not a turnaround setup, but also allows us to now entertain it on a reward to risk basis. I hope I'm making myself clear because I'm not sure if I am. So now we can look up. The long-term trend ribbon is not what we're looking up to anymore. We're looking beyond it. Does that make more sense? And from here, the reward to risk is being worked on this basis. So here's our entry. That's our next major supply point. And this bit here is where our managed risk is going to be. Okay. So let's change the color of, let's make this green because I know green, I guess, is up. Green is bullish, red is bearish, or let's make this maybe pink. So clearly now we have a far greater reward than we do risk, okay, to our obvious managed risk point. MRP, managed risk point this time. What was that before? Maintain risk position. We're not using that. I've reassigned that acronym. Our managed risk point. We need a glossary of terms. Can I get a thumbs up if that made any sense at all? It's important to understand how the aggressive setup works. It's not a turnaround setup yet. We know the rules for turnaround setup. We've seen lots of those. Good. Okay. So the problem with the aggressive setup, our major problem with the aggressive setup is looking up and seeing that bloody big long-term trend ribbon. This is how we have rules around dealing with it. Okay, let's keep moving. What did I say? Equals R, yes. And could plus R. So if I see a nice big white candle again, I could happily plus R here. Roscoe saying ACW, yes, for a continuation setup. That's in my feature charts for tonight. I can't fault it. Looks pretty solid to me. Double greens makes it a continuation. That's clear cut. I love it when things are clear cut. Let's go to price action. Rising peaks and rising troughs. Also clear cut. Decent, very decent separation between last trough and second from last peak. What that means is that when we're pulling back, the demand side isn't waiting for the whole pullback to the last point of supply now acting to point of demand, the last breakout point. That's the best way to put it. We're not waiting for a pullback to the last breakout point. There's very little supply in the market, small down phases, long up phases. So pretty solid, clear predominance of demand side candles and a solid demand side candle on that last one to boot. And quite a bit of relative strength. I don't know if you've noticed down the bottom also there. But we should also make sure that we have enough reward to risk. I mean, we're going back to the middle of last year. Probably, you can see where we had some workings before. Those were to, I don't think I can extend this actually because it's an arrow, so I can't extend it. But I do want to extend it because I want to show you where it ends up. And we'll just try and make it as horizontal as we can. So that's getting a little bit close there, isn't it? So going to eyes wide open. It doesn't mean you don't do it. It just means, okay, I know that's there. I'll keep an eye on it. If I get the almighty black candle there, I know I need to manage my risk a little bit earlier than I'd hoped. Okay. Let's annotate that one for next time. Plus R, don't have to wait. Equals R, if you're just happy to hold on to it. Let's go to FML for a continuation. It's been holding reasonably strong. You know, it's been probably one of the stronger ones out there, to be fair. And but we know nothing lasts forever, so we're going to just be, cautious but not crazy, alert but not alarmed. That's still the level, I think. What did we say last time? I think we said minus R a smaller amount, so just a precaution on the basis of that candle there. In fact, I think this is where the computer bit the dust, was it not? Because I think I was trying to explain this idea of how rigid, my rules were way back when, and it caused me to hang on to things that I wasn't comfortable doing and then beat myself up like crazy. So I've made my rules less rigid. Hopefully you agree. There's still some rules that we can't screw up, and we don't muck around with. But in terms of can I get out some, the answer is, hey, if it makes you feel better about getting some out, just do a little bit. I think before the lights went out last week, I said, hey, if you've got 1,000 shares, you don't have to do a third, maybe just do 100 shares. But whatever it is, just to tick that box. If it crashes the next day, you go, actually, at least I got some out. And man, your mindset is completely different too. Oh, I can't believe I knew I should have sold some. That candle, I know what that candle means. Yep, but also know, if we have a clear and honest mindset, we know that that candle is not enough in itself really to trigger a wholesale exit. Right? For me, it's not really enough to do anything. But call it scratching the itch in a sensible way. No change. We only just covered it last week, and actually nothing's happened in a week that's been a zebra. So I think we're okay. Could have been better today. Obviously, now we have the benefit of this point of demand here. And beneath that, I would question, because I think if we're beneath that, it's not far away from the short-term trend ribbon. You might stack a couple of R's here and maybe at most have, half your position remaining, or maybe a third of your position remaining. But potentially, still some skin in the game if you're that way inclined. I'm not going to tell you one way or the other, but I think we can see clearly that we wouldn't have a full risk position beneath that point there. Let's go to Lynas as a potential turnaround setup. And I think I put it in on this day here as a regular. I don't think I put it as a feature, just on the basis that if it's in that regular list, it is a plus 1/3. So it's more of a punt. I like these to just mix up my types of setups a little. So that is what I'm looking at. Let me get rid of that there. But you can see the price action at that point is back to high peaks and high troughs literally on that day, because we closed above that peak. Okay, so the high is above that peak anyway. But the action of that high above that high, we don't know where this next peak will form. It could be the next day, it could be the day after, but we know it has to form above that. So 100% in terms of ticking off rules that I don't argue with, I need to have rising peaks and rising troughs. We had it. Strong candle, solid candle. Nothing all that interesting going on with the volume here. I don't mind volume on the up bit because it speaks to supply removal, and there's going to be a lot of supply which we need to remove, obviously. What I do like to see is on the down ones, on where we do make the low, some sort of volatility or volume pulse. Above average, either or both is better, and that just speaks of a selling climax. So the traders that had to get out are out, and at the same time there's lots of volume equals lots of demand, somebody got back in as well. Now, this is not the right candle for that, but it is consistent. Well, that one's a better one, above average, but this is not the right candle for that. But anyway, there's like the explanation is valid, but that's not the right candle. What's the right candle? A nice big white body or a downward pointing shadow. So, but that's the psychology of what's happening there. Hey, it still turned out to be roughly the case, didn't it? So on that day, I think is the first place that I can go plus R. And again, I think maybe I've trained you to look at something like that and just instinctively now know that that's quite a high risk trade. I think if you hadn't met me, you might have not had any problems at all. I'm trying to put that in a place where we can still see it. You probably wouldn't have any problems at all buying on a day like that because you go, oh, Lynas is cheap. It was 22, now it's 15, must be cheap. Not that potentially you'd wait for it to go back up, because you probably would have tried to buy it on that day, that day, maybe you got it right. So that's the way I would look at it. Yes, it's higher risk, but it's holding the long-term uptrend ribbon. Price action's gone back. It's a nice candle. I've seen a little bit of the volume I want to see it in those lows. So it's worth just entertaining. And in this case, again, you might not do your normal risk. So if you normally added $2,000 of risk, maybe it's a 500, maybe it's 1,000. Just to respect that it's a little bit risky. We just want to see how it plays out. I haven't really had anything else since then to suggest we do anything else, but probably just equals R at this stage. I don't like this candle. I don't like it. That's okay, but not wonderful, considering that really there's a big gap again in that closing to high of the session. So a bit of damage done. I know there's a lower shadow, and that's encouraging. And then today we're now starting to respect that short-term trend ribbon. So I don't know, what's the question here? This is for a turnaround setup, is it? Trying to find this place. Michael just says turnaround. Yeah, it's more of a continuation turnaround, isn't it? Or turnaround and continuation. On this candle, no, absolutely not. I shouldn't have to explain that. It would take, test of that, maybe a pullback, nice candles in there, kind of repeating this pattern again, and then I think we're building on what we started here. So it's just equals R for me at this stage. Leaning towards maybe even going flat again in the not too distant future, because on a close beneath here, I just can't justify it. I just what I thought might happen, and that's all this is about. I think it's easy for all of us in here to visualize that exact picture. And this is all I do, ladies and gentlemen. I don't know if you've realized the secret of my success is just pattern recognition. Is just, that's a picture I've seen before. What happened last time I saw that? Oh, okay, it bounced off the dark green bit and it went back up to the high. I saw that happen quite a few times. Also, I saw a few times where it didn't, but most of the time it tended to happen. Okay, I'm happy to back that because I can visualize what it might do. That's my whole system, ladies and gentlemen. But understanding that if it doesn't do that, I need to take steps as well to manage my risk because we know the risk that's involved. Let's go to... How is it that I lose? Because you keep typing and it pushes the other ones up because I've scrolled to the bottom. That's the way I'm missing my spot. Okay, let's do it this way. Wickets fell faster than crypto over the weekend. Boom, boom. Was it boom tish from HOUS? Absolutely did. And yeah, I don't know. Is anybody, I know you all heard me when I got out of on the first push just above 100. I knew it would, that's the wrong word. I had a hunch that it would triple the stops at 100, probably get to about 100 and change, 103, 104, and I stepped out of it. 103, first black candle. I think 107 was whatever next black candle. I was finger on the trigger for anything that resembled a black candle above 100. And then out, and I haven't touched. I got out of my Ethereum. I sold all my crappy little alts. And got something from the ATO because we just had to file our tax return. Something from the ATO, ladies and gentlemen, that I have not got for my crypto in probably since 2020 was one of those. You have profits. you've got crypto profits. So I had to pay the Reaper on that one. But haven't looked back. I don't know about you, but I am not missing it at all. I'm so glad I'm out of that crap. Let's go to Cure ETF. Yeah, Cure ETF still looking. Oh, is it Cure? Cure looks amazing. Hey, Cure, where's Cure been? Turnover filter. Oh man, I mean we've had Cure several times, but it's obviously come off the turnover filter because it's just not trading all that much. This is the best looking chart in the universe right now, and I'm looking here. Oh, you can't see where I'm pointing. I'm looking here. Let's go back here. No, that's not going to work. But that's where I'm looking. I'm sure we've done Cure before. That's going to change to a 1 at some stage. Oh, no, it's not. There you go. Oh, there's a 1 all the way down there. I mean, it has in the past. Maybe just maybe getting confused. Anyway, absolutely yes. As I said, that is. I'm not even going to draw on that one. That's the best chart in the universe. But drug is the one I was thinking of, which I'm guessing drug and Cure are pretty similar sorts of things, but that's more of a turnaround setup. That looks very, very strong as well. And we know when markets get a bit sketchy, we tend to, well, not we, the big fund managers, particularly the US ones, tend to play more defense, and that's healthcare. But yeah, that's amazing. And the only reason why I haven't seen it is the turnover filter, which is annoying me right now. That one is for, that was also HOUS. Let's go to Robert, TVN, which I think is still looking very good. I know today's a bit of a nothing day, but certainly that was a plus R there. I'm looking at that and I must have run it as a feature trade, I guess, this morning for Friday's candle. And today's not anything that I'm concerned about. No, I wouldn't plus R today, certainly equals R, but plus R on the next demand side candle. Let's go to Robert's next one, which is BMR. That one's not ringing a bell. Oh, okay, yeah, and reason why it's not ringing a bell, you can see over here, the turnover filter's not being met. Doesn't mean they're bad trades, just means the turnover filter's not being met. And you can kind of see straight away why. I mean, it is sketcherama. It's just Swiss cheese of a chart. We go into these things eyes wide open. That's all. We understand that, you could get one big black candle that goes completely the wrong way on very little volume. You've got very little protection from that. But from what I can see, it meets all of my criteria. We've got a little bit of an influx of volume here, so we're starting to get a bit more liquidity coming in. We can see 200,000 shares on a 20-cent stock. What's that? 400 grand or something like that. Or 40 grand? Yes, more like 40 grand, not 400 grand. 40 grand. Very, very, very little turnover. But if you're okay with it, I'm okay with it. Just understand what you're getting yourself into. Let's go to BPM, which also looks fantastic, and also not seeing, but you can see this. This is my model in a nutshell. Remember, the turnaround setup that I said is worth an unlimited amount of money for the rest of your life. There it is there. And that's ancient history, though. Right now, it's still okay. 20 cents. I don't count it as a round number, but you can see why some people would want to sell up there. I think it'll only be sort of a temporary issue, though. Nothing really major here that's kind of worrying me. That obviously up here, there's a bit of a level, but that's miles away. And I think even that's today. That's what's happened today, isn't it? So 20 cents, and it is actually a pretty decent level from past, but a fairly distant past. It should. I don't think it's going to have too much of an impact on the market, apart from what it's already having now, clearly. By that I mean something like this wouldn't surprise me, and then I could add risk. Would I reduce risk on that day? I don't think you need to. That's my opinion. Let me say I wouldn't. I don't know what you should do. You should do anything you want. Minus R question mark. It would only be to scratch an itch, and that would be a scratch an itch magnitude. I'm not introducing a new form of minus R here. I'm just stating the bleeding obvious. But we've still got substantial skin in the game, I think, on the basis that this and everything else still looks very solid. Mark telling me to change screens. I did that twice today. Thank you, Mark. Let's go to Perry's got some US ones. We'll do those very soon. Robert's got, he's just here for Adonis's picks. Well, you've got a fan, Adonis. How about that? AYA. Yep, we got some issues here, don't we? Minus 2R, says HOUS. I think you've already been doing it, surely. I can see the close beneath the short-term trend ribbon there. I can see a few other issues that it's had, and we've got falling peaks, falling troughs as well. And just going to move this one. Come here, and you come here. There we go. So, yeah, we would have had, for me, that the minus R's are stackable. So I think on this candle here, we've got a minus R for the close beneath the point of demand. We've also got an area here as well. And you know, my preference is a 1/3 system, but we've moved to a minus R model. I think it's more flexible, and I think it's just simpler. And I can see 3 minus R's over the course of those 2 candles. For what it's worth, I can see another minus R here on that candle. Okay. I know there's no way I could be for FRP. That's one thing I can say. And for me, hand on heart, I'm ZRP. That's my view on it. Let's go to Adonis is a star. What is it? What's Adonis? You got a few fans today. Let's go to Sonia, who's got Weebit, which is down here. Yeah. It all went pretty sour pretty quick, didn't it, for old Weebit? This candle is one of those scratch the itch candles. And if you said, look, I'm going to hang through on that candle, I can see why you would. I can see why you would if you did nothing on that candle. If you scratch an itch, I'm not going to complain. But there's no there's no debate now, right? So we know that's managed some risk on that candle. If you were giving it any benefit of the doubt on the next minus R, it's gone now. So certainly minus R here, that's without a doubt. And it's a you know what? It's a decent candle. I know this sounds like Harry hindsight, But hopefully you agree. Not only is that a monster, but when you combine it, when you blend these two together, it gets so much worse, right? Arguably that candle as well. I think you know why, but even if you didn't, there's now no argument at all. And order of magnitude, that's a double arc as well, where it's the candle, it's the follow-up, it's the complete evacuation of the demand side from the picture. It's the total dominance of the supply side. What was somewhat unfortunate here, in fact, I was going to say we didn't have any troughs to peg ourselves on, and I feel that that's a trough there, isn't it, with a lower high and a lower low, yes, and then a high high and a high low. So it just solidifies this as a substantial risk-off day, and I would say zero after by that day there, and we wouldn't really care what it's doing now. If you're asking about this one for a potential continuation turnaround, actually it's getting close. It's not that terrible. Okay. You might say, Carl, if I got out of my last bit there, I got out my first bit there, maybe I got a bit here, a bit here, a bit here, and a bit here, and now you're telling me I need to buy it back. Well, I'm not really, but if it's conceivable that it sets up like that soon enough, and in which case you may be getting back in around here, but I think your average is much better. You know, you're still much better than holding through that, because it could have just kept going down. You know what Weebit's like. So I'm not sure what the nature of this question is. In fact, that's because I didn't read the rest of Sonia's message. And she says, can I look at it for a turnaround trade? I would like to see where the trend ribbons are in comparison to the chart. Okay. So anyway, we did it as a case study. I should read the messages. Okay, so what do we got? What do we got going here? It's still lower troughs, so there's still lots of work to do. I reckon that we've got to deal with these trend ribbons first, and if it starts to look like that, go back to that Lynas setup, the candle and the little price action we had on Lynas. If we start to see that, then I could absolutely entertain it on the basis of that. Okay, but it's not there yet, and it's too early for me to even draw things like next demand side candles. We don't have the right price action, but an interesting case study, both on the way down and for what could happen. Donna saying USA where the action is. It certainly is. Yippee Kai says, Robert. Perry saying, hey Carl, next bonus US stock. Okay, we'll do that on the way up, which we're at the bottom of this, so we're about to head back up. And Perry's got, after breaks, dollar. Haraji saying COV, which I think is ASX, is it not? That one? Cleo. Wow. How good's that? Yes, for me, obviously. Let's zoom out, zoom normal. I think we're going to see the turnover filters a zero there. And that's why I haven't seen it. Although we did do it in here, didn't we? A few weeks ago. How about that? That's why I love the ability to put marks on the page. So I'm guessing you must have asked about it last time, Haraju, who's asking about equals R this time. And you're going to get the same response as last time. I think it's better than your equal R. I think it's plus R. I think it's plus R even on today's candle. So it's not even a next demand side candle. Today's candle, like if you go up that much, decent volume as well, volume volatility is, and then that's your pullback day. That's not a pullback day. That's very strong. Yeah, that looks fantastic. So again, this is the one wonder of turning up on Monday nights. You're going to get setups that you're not going to see in my regular list, and you probably won't see anywhere else anyway. But it's great to have other eyes adopting this and using this methodology. MVF for HOUS, which is an interesting one, is it not? So the last thing I did on MVF was to call it a feature chart short on that day there, because it was cactus. Okay, and every day of the week when I see a chart like that, you know what I'm going to do. But anything can happen, like a potential takeover offer, because there's some value investor there, you know, nerd, glasses, spreadsheet, that looked over MVF and said, oh, this thing's really cheap. Let's try and get it at 90 cents. You know, it was true value, fair value's $1.50. It's just a bit of bad news in the short term. It's a great company, just at a discounted price. And they lob in a takeover offer and shorts get barbecued. Is this a buy? Is it a long? Yes, it is. As an aggressive setup. Well, is it? No, it's not. I guess, no, it's not even as an aggressive setup, because an aggressive setup, I've got to be excited there. We still need to follow the rules. Aggressive setup is, I've only got, that's the trough to peak. So I actually don't have any, I don't have any peaks and troughs in between. But the reason why I initially said, oh yeah, it is because we've closed above the trend ribbon, and it could never be turnaround. But no, there's still some more stuff we need to do. I mean, we don't even have a short-term uptrend yet. That's still down. So it's still a bit fresh. It's still a bit early. But this could rectify itself very quickly in that we may see a little dink in here. Obviously, that's going to turn green fairly fast. And with that dink and that green and the price action therefore changing, then it's going to, even if that's still pink, become an aggressive. If that turns to amber and the dink is there, then it'll be turnaround. So it's a no for me. It's still, my model is, the rules of my model are saying it's still far too aggressive for my liking. That's all. But we'll keep an eye on it. And that's it. Let's head back up the list. We're going to head over to the browser window there, and we're going to decipher Perry's bonus stock there, which was NXXT, which is NextNRG. And he's saying after it breaks $1, after it breaks $1, after it breaks $1, what are we doing? Oh, short, to go short, yes. I'm thinking, that's not one of Perry's usual charts. It's kind of the opposite. Yeah, look, the only thing I would say is a dollar stock in the US is a penny stock, all right? It would be the equivalent, literally the equivalent of something at like 1 cent or 10 cents for us. So for them, I think, this thing's probably going bankrupt. But you have to say, well, for them, there's not much upside as a short trade, if you get my drift. So it's not a no, it's just, where do you go from here as a US stock? Oh my gosh. That's like one of our mining stocks. What does this thing do? So yeah, look, clearly, I mean, it's a textbook chart for a short. But me personally, honestly, I wouldn't do it on the basis that it's $1. And I think that you've missed the party. Famous last words, it could go to 10 cents as well, but I think that's almost in the rarity basket unless something's literally gone under. But super great example of a short setup. Let's go back up the list, and we're going to see the other US picks from Perry, which are ROST, and I expect this one's going to be a little bit different. Yes, it is, and I love that. I love that last candle. That's so good. Let's go to the weekly chart, because we're just going to look and see if there's anything out there, and there isn't. It's blue sky as far as we're concerned. And just seeing if there's anything I don't like about it, and there isn't really. It's through that very cleanly, very clearly now. It's got a nice base that it's working off. You can see that's all part of the same area, that same old supply acting as new demand, and just the most beautiful candle there. I can't fault it. I wouldn't even say it's that far away from the green line, to be honest. It's kind of as good as you can get. So on that basis, it's a plus R for me. If you don't have it, you're looking to allocate risk. Remember, we are at our lowest risk setting at the moment, or equals R. If you already have it, save. Let's go to Perry's second one, which is COGT, Cogent Biosciences, which is another example of get that big gap. And I wonder if this is a takeover, because that's not your normal earnings. Is that fair to say, Perry? I don't know if you've bothered to do the research on that. And if you haven't, that's fine, because you're in the same camp as me, don't care. But I reckon that's had that. I mean, from 15 to 35, it could, 15 to 32, it can really only be a takeover. But I'm just mentioning this to pull it back to that MVF example. And what did I say there? I said, let's just wait for the supply side to respond. And then when the demand side comes back in, we'll know we've got our message. They're happy with the level. We're moving back up. Supply side response is minimal, and the demand side is thinking much higher on this thing. And that's exactly what this thing did here. Okay, and last night's candle is the perfect time, I think, to get in after that confirmation of just total demand side control here, and a supply side that is actually also quite happy to hold on for more now. So yes, for me, just zoom that, and go back to the weekly chart, because I should double check, and there's nothing. That's a problem there. And there's always a risk. You go into these eyes wide open, takeover bid gets pulled, fails, whatever. Doesn't work out. Keep that in mind. But equally, there's a scenario here that says there's a higher bid coming as well. No indication as to whether that's a takeover yet from Perry, but we'll keep moving. Let's go to, let me save that one. Perry's not sure, he's checking. Let's go to HOUS. I think it's important to know though, yes, we could say, it's oblivious to all those things, but I just want to know the nature of the risk. That's all. It's not going to stop me from doing it, but I understand that if it halves the next day, that you could say, if I didn't know it was a takeover and it halves the next day, I would beat myself up about it. If it halves the next day and I did know it was a takeover, I would say, I knew the risks. I guess it's the same result, isn't it? But I'd rather know than not know. I don't need to know anything about this. There's a big gap here, but see, a few bucks, 20%, more likely to be earnings here. Another great example of watching to see that supply side response after that tectonic shift in thinking. We did actually see some supply in. It took a catch up to the supply, to the short-term trend ribbon. And short-term trend ribbon, what an amazing, wonderful thing it is. And it works so well here. Supported the price, cushioned the price, up she goes. And we'll just have a look out to see, there you go, nothing to worry about there as far as I'm concerned. So I can't fault this one. And a bit of a theme for today, isn't it, is the gap and how we trade around that. A lot of people, stock gaps up like that and they go, that's too high, I can't buy that, because they're anchored. They're anchored in what the price was doing before. And they haven't understood that the reason it's gapped is because the market has changed its thinking. And if it's changed its thinking that much, it's impossible for traders, and this is the key. This is why things gap up and keep going. Once the market has changed its thinking, it's impossible for all the money that now needs to shift into this to get in straight away. Right? They can't. The supply side is also equally thinking much higher now. They've researched this bit of news, whether it's good earnings, they've extrapolated out. They want higher prices. They start to withhold their supply, and the price is going to go up. The market is thinking this is a great event, we're going to trade with it. And mums and dads are thinking, I can't buy that now, it's gone up too much. Plus R and equals R here, if you have it and you're happy with your risk level, but certainly plus R if you're happy to take on more risk. So the usual fantastic setups there from Perry, thank you very much. Just heading down here, g'day Carl, been a couple of years since you've left the whacker with a smile on your face. It has been a couple of years. Perry had this a couple of years ago, but I'm looking at FTAI. I did catch the last test at the whacker, and I caught the first test at Optus Stadium. FTAI. Now, what are we looking at here? As a high-risk, aggressive turnaround play. A lot of suppliers come out, and short-term it's starting to go amber, but I don't prognosticate. Are we talking about a short setup? Positive drug trial result. Oh, that's even better for me, Perry. I see that I like better because there's less chance. There's still a chance the drug's no good, but there's less chance of the takeover bid being pulled. So that's better. So the question I've got for Matthew is just confirm. A turnaround play, I get that bit, but I can only assume, by the way it's heading, you're talking about a short trade. It is aggressive. It is super aggressive for a short because we're not even interacting with the long-term trend ribbon yet. But you can use the same thinking, right? This is going to blow your mind, ladies and gentlemen. This is going to double your trading opportunity, what I'm about to say to you. So it's the opposite. If the turnaround is, okay, we see a bit of a trend, I guess it's a bit slow here, but sometimes it happens a bit faster. This is not the best case study I could use for this. I might find better tonight. But we can start to short things as early as kind of, well, not really. So we still want the short-term downtrend. We still want falling. We had falling peaks and falling troughs. We just didn't have the short-term downtrend. Short-term downtrend is here. So yes, this candle here, we can short it, but we can't make the reward to risk. What I want is a case study where this is a bit higher up. So what I'm trying to say is we could actually short things very aggressively after seeing the same sorts of signals that are kicking us out of long trades. We do these every Monday night. Oh, that's where we would have got out, and you guys are going, oh yeah, I know, I should have done it, but I didn't. But any of those could also be short setups on the proviso that we have some of these other things in play, because they are there to make sure I don't go too early. But this one's going to get killed from long-term trend ribbon. But if it's higher up, and I could make the reward risk into long-term trend ribbon, then I can take it as a short trade. I don't know if that's answering aggressive up. Okay, I said, look, see, we're on different wavelengths here, Matthew. Matthew's saying aggressive up. I'm looking at this as an aggressive down. And I can see problems because the short-term trend ribbon, the price action is not great just yet. I know we've had a little higher peak pushed here, but unconvincing, and the candles are unconvincing. I mean, that's Friday's candle. That's terrible. Predominance of supply-side candles. So I'm far from thinking of this as a potential turnaround continuation. It would have to do high peaks and high troughs. Just give me some big white candles first. So it's a long way. I'm actually looking at this more as a turnaround downtrend. Fundamentals, Thanksgiving, Christmas flying. Fundamentals, what are they? Let's keep going. Let's go to, we've done all Perry's, so we're going to keep going. Eventually we're going to get to Adonis at some stage, who's usually our last bunch of US stocks, aren't they? And last but not least, let's go to GSAT, Global Star. Looks good. I don't mind it here, Adonis, just on the basis that it's tickling that. I think Friday's candle's just a bit too aggressive for me, though. If you're looking to buy this pullback here on this candle, it's a little bit... Which one? This one? No, that one. Okay. So it's more, what are we doing now, rather than getting in for the first time. I think it's fine. Yeah. I mean, so even contemplating adding risk on the pullback test and hold with a really nice candle of the short-term uptrend ribbon, and then I sort of pulled that back and said, well, actually, those are a bit too strong for me to want to just add risk here. But happy. I'm an equals R here. I mean, I know these feel a bit scary, but happy to give it a benefit of doubt based upon, sorry, that's Thursday's candle, that's Friday's candle. But equally, we've also got some pretty decent areas now. That lower shadow we can use as a point of supply that we really shouldn't close below, manage risk beneath it, and then certainly beneath the short-term trend ribbon. And hopefully, I know that's not a good word to use without trading, hopefully we head back up, and your worst case scenario might be even, if you had some signals in here, and then you're probably not worse than break even by that point. So equals R for me. I know I'm all over the show there. Equals R for me. I'd even go plus R if we saw a little bit of a dink. So something that was big, and because I'm worried about these candles, so I need to see a response to those candles. That tells me that the demand side is still strong, and the supply that created those candles is less active in the system. And if I saw that, then I could do something like this, where I'm even looking to add risk. But I think, given the broader market environment, probably better to, there's times where you can go, touch of the short-term uptrend ribbon, nice candle, aggressive entry on that basis. But yeah, I don't think it's warranted just at this point in time. But very strong, I still think, and equals R would be my view on that one. And I've given you some places to where you might be reducing risk if need be. Let's go to ABBV, which is ABV or ABVI. Very strong. Happy with this one. In it. Okay. But that always, that always includes, always includes potentially adding risk as well at the end of the day. So happy with this one. Good comeback. Limited supply side response, holding the short-term trend ribbon, strong candle on Friday, looks very solid to me. The benefit of that last trough there, and it is really wonderful for you because it just pegs that trough, that short-term trend ribbon. It's a great trailing stop now, isn't it? Level. We can manage our risk beneath that with confidence, but equally also hold it with confidence for now. I'm very close. I'm just looking at this shadow here, shadow here, shadow, shadow. Clearly, we're in the influence of this point of supply, and that's starting to just bear a little on the market. Friday's close very strong, a little bit of influence. Any next demand side candle, I think, that closes on a high in this range, I think for me is enough to say that we've consumed enough of that to have another crack. So I think I'm equals R today, but close to plus R. But certainly I can get to plus R on the next demand side candle. Next demand side candle. That's how I would trade that one. And click save on there. And then we're going to MRK as a turnaround setup. Merck Co. We saw that the drug ETF starting to pop up, and this is no doubt contributing to that. It'll be in there. Balked a little at 100, didn't it? A little bit of a balk at 100. And, now I guess now after me now, Adonis, you kind of see these things and you go, yeah, that makes a lot of sense. I know it. I know what's happening there, isn't it? So we look at these levels and we go, yep, that's all making a lot of sense to me. So it's not as sinister as you might think. That level or that upward pointing shadow, given the 100, and I'm just waiting for this. Let's go to 54. That's it. Now we can see it. To 80. I want that to go there. Okay. Yeah. So we're going to expect a reaction there, a supply side response, and now we just need to see the demand side kick back in and do their thing. I'm still equals R, so that candle doesn't worry me at all. It's a very logical place to see that sort of candle. Plus our next demand side candle that tells us that the supply that is so clearly in the system at that old area has been consumed. Let's go. Yeah, well, that's got that's the start of the day. If it could close around that 100, it's done enough. It's done enough for me. Let's go to AMD for potential short. Ooh, that's interesting. This is potentially that aggressive setup, but my aggressive setup would still require this trend ribbon to have crossed over. It's not there yet, but you have everything else for it. I don't think you're going to make one-to-one reward to risk into the long-term uptrend ribbon. And we know that things tend to bounce off that ribbon. We've seen it about a dozen times tonight, probably. So I think it's too aggressive for me. Yes, I can see absolutely the big black candle there. I get it. But I think, and even Friday's lower shadow means it's going to be a little bit of a bounce. And look, as it pulls back up here, maybe throws in another signal there. We might get something, but I think that's too aggressive. And it's just my model saying there's probably some other setups out there, if you look hard enough, where we've got everything heading in the right direction rather than going for these high risk setups. This one's a bit closer, but probably needs a little bit of work in terms of, there's still a level there, and we're still actually heading up on the long-term trend ribbon. So it's not far away from that Bitcoin setup that I showed you before, but that Bitcoin setup did already have an amber long-term trend ribbon. This one doesn't quite have it yet. So yeah, I think also based upon my model, a little bit too early for me, but one that I think that you can keep an eye on over the next couple of weeks. It'll probably take that long to do the transition. The other thing I look at is, it has a history of really not respecting the trend ribbon as well. So, even when it kind of set up here, you had to be very quick. I mean, it really, if we go to the weekly chart, I think we're going to see that maybe this is, there you go. So maybe this is more of a trading range than anything else. And possibly in the too hard basket on that basis. That chevron, yeah, looks like it's like our Woodside, isn't it? And that's it. That's the end of the list. No worries, Adonis. I'm gonna head back down and just make sure I haven't missed anything, which I don't think I have. We're going okay for time. If there's nothing else, we might well just adjourn. I'll give you the next one in. If it's there, if it's not, we can all have an early night. I think we're heading that way. All is said and all is done. Okay, let's go back here and just remind everybody of the disclaimer, because it's important we make our own decisions, isn't it? Everything's general advice. Consult a financial expert to determine the appropriateness of everything we've discussed tonight for you. And I'm sure that financial expert will have the best, the very, very best of advice for you as well. Until then, ladies and gentlemen, as the little cat is doing, where is he? He's on that side. He's back to front. As the little kitty cat's doing. Hang in there, everybody. All the best for your trading and investing. Until we catch up again. Bye-bye for now.